All right, hello, traders. It is Thursday, July 18th, 2024. Bear with me. My voice is a little scratchy today, so I'm just making it through it. But I didn't want to go another day without a video for you, so I want to come out today. Let's talk a little bit about what's going on in the market. So we'll spend a little time talking about the market. What are we seeing going on? Obviously, 2 days of selling. You would think the world was flipping ending somewhere. Okay, 2 days down. I think we were down a whopping 0.78 today on the S&P. Holy moly. The NASDAQ fell 0.48. Okay, and then the Russell fell 1.85. Okay, you would have thought we were down 10% today after a 20% down day yesterday. Look, people, stocks go up, stocks go down, indexes go up, indexes go down, futures go up, futures go down. This is trading. Okay. We did not lose a trade in the last 2 days, and you still think that the world was ending. It's not ending. It's all good. It's all good for us. We're happy with where we are. I'm going to go through my portfolio. So if you want to see what my portfolio is made of, stick around, watch the rest of this video. We'll talk about a few charts, and we'll take a look at what the market's showing us right now. And then maybe we'll get into the account and talk about what we're maybe looking to do next tomorrow if we get a chance out there. Anyway, so let's dive into it, and let's first take a look at the markets and see what's going on and what's happened out there. So let me get off the video here so that you can see my whole screen. We'll share our old friend Thinkorswim charting here, and boy, what a nice uptrend that we've been in here on the NASDAQ. But let's start with the S&P. Man, look at this thing. Up, lower, yeah. Higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. And we have not even hit a low yet. Okay, look where we are, people. Okay, come on. There's this little red candle here. Okay, we've had plenty of red candles before. Like back here in April, you'd have thought the world was ending. Well, if it didn't end there, it isn't probably going to end here either. But let's see what happens if we pull back on the weekly. I would love to see a pullback around 5,400. Okay, that's 200 points down from here. Now, we were only down 50 points today. Okay, so we're going to have to do better to knock it down a bit. I think if we can get down in here, the market's going to be a whole lot healthier going forward because we've been overbought. And simply, when you're overbought, all you got to do is just get back on the horse, okay, and get no new trade opportunities. So I love it if we can pull down here and get RSI back under control, see what things are doing. But if we look at the daily chart, excuse me, new highs. By the way, we set a new all-time high 3 days ago, people. Okay, 3 days ago. Okay, so back on the 7/16. Okay, today's Thursday, Wednesday, Tuesday, and we tied it 2 days in a row. So Monday and Tuesday, basically new all-time highs. We're 2 days off of new all-time highs, and you'd think the world was ending. All right, we came down, touched the 21 EMA, and we did manage to stay above it on the session. Overnight sessions open here. It's pretty much flat to up fractionally. All right, that's the ES. All looks good. We could use a pullback. That'll help get things a little right-sized, in my opinion, set us up for a nice run in the next couple months. Let's take a look at oil. Should we be panicking? Okay, well, let's look at the weekly chart here. Nice bull run. Hit the symmetrical triangle trend line. Maybe we'll extend it out just a bit more. Hit that triangle trend line and failed at it, just like it's failed at it before, but it's just getting narrower and narrower. Right, we are sitting here in oil right at about a 50 on the RSI. MACD is almost at the 0 line and flat. You're in a squeeze for, I don't know, since the beginning, end of April, beginning of May. So May, June, July, 3 months in a squeeze. Something's got to give, okay? Is it going to go down, going to go up? Who knows? But right now you're above the 21 EMA and the 50, and the 21's above the 50 and the 200. Looks pretty good to me. All right, here we go on the daily chart. A little bit more bearish here as we fail off that trend line, like I said, pulling back down, hitting the 50, holding the 50. Maybe we get a little bounce, maybe we don't. MACD, RSI squeeze, all falling, telling us that the momentum is coming out of this run for now. So hopefully we get a little sideways consolidation, nice flat RSI. I think this sets up for a nice strangle play. All right, and that's what we'll be looking to do, get into a strangle here. All right, bonds. Been in this symmetrical triangle as well. So everything's got the triangle pattern going. Okay. Well, we're now at the top trying to break out and not right. You know, haven't done it yet, but we're close. Okay. We are close on bonds. Still bullish to me. The weekly, everything looks bullish. Overall, we're hanging above this 21. We're trying to break above the 50. All moving averages are stacked on the daily. Bullish PSAR. Things look good for bonds. Squeeze is firing. So today is squeeze fired to the upside on bonds. Okay, or at least during the after hours it is. We'll see what happens. Okay, I'm excited about bonds. A, I believe they're a good strangle candidate. B, I believe they're a good leap candidate. I believe in bonds over the long term. Do I think the bonds are going to triple or quadruple like some of the people out there? No. Okay. Do I think I've got TLT shares. Do I think they're going to triple? No. Do I think they're going to go up 50% or something before the middle of next year? I'm hoping so. Okay. Hope is not a trading strategy. Okay. But based upon everything that I see here, that is my assumption. And I'm playing the percentages. Gold broke out of its sideways trend, busted higher, hit the 3 ATR band, hit a new all-time high, and then we sold off for 2 days. MACD rolling over, RSI rolling down, squeeze is getting a little bit long in the tooth. The weekly still looks a bit bullish. Overall, excuse me, I like gold, so I like where we are on here. I apologize for my voice, folks. I hope you can hear everything that I'm saying. But I like gold. I love the fact that gold's pulling back. If it could pull back closer to this 21, I want to get long more gold. Aussie dollar, nice pullback this week. And we broke out. Everyone freaked out that, oh my goodness, my Strangles are going to get murdered. And they have not gotten murdered. Not only that, but my Strangles are up 35% in 17 days, people. And we're rolling over back to the 21 EMA, losing a little momentum on both here, but still over, we're above the 21 to 50 here. I still think the Aussie dollar is a good looking trade to run Strangles on. And I think right here, still a good strangle opportunity. So I got bonds, I got the Aussie dollar, both of those good strangle opportunities. Let's take a look at the euro. Okay, now this thing busted out and it has just continued to run. And so running pretty well. A little bit of a pullback today, maybe losing a little bit of this momentum as it hits the 3 ATR band here. It's a little overextended. But the weekly still looks pretty good in a long squeeze. Okay, really this is in about a 4-month, almost 5-month squeeze here. Moving to the upside on the euro. Not really strangle worthy for me, but I still think it's a good looking trade potentially for like a 112 or a leap or something like that. All right, the NASDAQ. Oh my goodness, folks. What's going on with the Magnificent Seven here? We had 4 of the 7 down today. So it was a mixed market. Okay. No panic, no nothing on this. We're just trading what we see, folks. Okay. And if you're worried about your P&L going up and down, you got to stop trading. Okay. Trading is about monitoring the trades and really focusing on your realized gains and losses and the individual trades. It's not worrying about what your daily P&L is. If you are adding to your P&L with realized gains, who cares what the P&L is? It's going to go up. Okay. I know that a couple of you that will argue with me here on YouTube, Tom, that's dumb. It's all about your net lick going up. Well, yeah, in the end, it really is. Okay, but I don't freak out by looking at my net lick every 15 seconds to see if my account's up or down 5% or 2% or 1% or flat. What I'm focusing on is how are my trades doing? Because if all my trades are winning, then my net lick really is not that important right now because it'll come around. Now, if all my trades start losing, then my net lick's going to go down. Okay. Pretty simple stuff. This is not rocket science. Okay. So anyway, we had a pretty decent increase in volume on the S&P the last 2 days. And if we look at the NASDAQ as well, we have had a pretty good increase in volume on these last 3 days. They've all been down days with volume increasing each day. That is no bueno. Okay. We don't really like that. Okay. If we're looking at the weekly, we're still way above the 21. So we still have a ways to fall. And if we even want to come down and test the 50, I mean, we got a long way to fall, people. Okay. So if this freaked you out this week, man, are you going to get freaked out if we come back and touch the 50? Okay. It'll be panic city for some of you. Okay. Because you're going to be watching, oh, my net lick is going down every day. What am I going to do? These guys are crazy. They're putting on trades. Okay. Yeah, we are. Okay. And we're going to make some money for you. Okay. But if you're going to sit there and panic and tell me you're panicking and everything's red, okay, you're probably going to fail. All right, let's look at the daily. Broke up through this, through the support line or the resistance line, came up here, set a new all-time high, really a new all-time high last week, people, not like 3 months ago. We're at an all-time high last week. Okay, the world has not ended. Okay, but this all-time high here came on a large bearish engulfing candle that every technician on planet Earth said, whoa, you better check that out. Okay. If you look back here and you look at this little pattern last week, okay, for those of you that are paying any attention as I'm trying to teach you some charting, okay, what kind of a pattern is this thing specifically? All right. So maybe it's a bit of a shooting star or a doji pattern here. However you want to look at this, it's not quite a dragonfly doji because that would be at the bottom here. But overall, it's a pretty bearish pattern. Bulls tried to win. They failed. This is obviously a reversal pattern. Big reversal candle this week. It's on with the NASDAQ. Broke through this support line, blew through that yesterday, blew through the 21. Today, came back down. We touched the uptrend line. We also touched this previous resistance, okay, which was also a support, solid line. Bounced off it today, but couldn't break back above the 21. Little indecision here. Now, this candle here could also be telling you that, hey, maybe we got a little bit of a reversal coming. Who knows? Either way, we are getting closer to the 50 here. So that's what we'll be watching. MACD, RSI squeeze, all moving down. NASDAQ doesn't look as good. All right. The Russell. Okay. Everybody freaked out. Okay. Why? This thing was in a symmetrical triangle pattern. Okay. Yeah, I know some people had strangles on. Okay. Sucks. Okay. We can't win them all. Okay. But we were in a symmetrical triangle coming to the apex of it right here. Okay. And we blew through this last week. Big rotation out of NASDAQ tech stocks into some of the small caps for a week. Then we took off here and we started blasting up through it again this week. Okay. Monday, big gain. Tuesday, Wednesday, a little toppy, a little bit of a reversal candle. Bulls couldn't push it up anymore. Started to reverse down today. Okay. MACD rolling over. You broke the 3 ATR band. Okay. You're too extended. You were overbought on the RSI. Okay. All these things are telling you, yeah, it might be a little overextended. Doesn't mean we can't come down, turn around, and go back up. But this candle right here, okay, a pretty significant shooting star type of candle, okay, or a, excuse me, in like an inverted hammer at the top here. Look at that wick up there. We couldn't break it. Next week's going to be a big week for the Russell. I still believe the Russell is going to be in decent shape, and it really has. It's been, moving up, it's consolidating, moving up. Okay, consolidate, move up. So it's doing okay. I think there's trades to be had in here, but not right now. I'm just going to let that thing calm down. All right, take a quick look at copper. All right, copper breaking out of this falling wedge, pretty bullish. Nice big move. Okay, we got a great move off of that falling wedge. Okay, and then just tipped over. All of the momentum is now down. Copper does not look all that great. We could probably move this to a little bit more of a still a falling wedge, just a little bit bigger. In this overall, we'll see. Can we hold the bottom here and continue to move sideways in this? We'll see what happens. But right now, copper, pretty negative. Doesn't really set up for anything that I would want to touch on copper. All right, and then quickly, just taking a look, Apple. Look at this daily. Okay, didn't even touch the 21-day moving average and bounced off it a little bit here. Now, you are very overextended on the weekly chart. Okay, very overextended. Okay, on daily and very on the weekly. Okay, doesn't mean we can't ride this for a while, but at some point, okay, the ride's going to end here. When it runs at a 45-degree angle like this, like right back here, you can ride it until the thing starts to flatten out. Okay, then the ride ends. Okay, and you got to dismount. All right, Microsoft. Okay, now this thing looked worse anyway, but it broke down through the 21. And then today it tried breaking down to the 50. Now it did hold it and still stayed above it, but everything's pretty bearish on this. But we're still not even to the 21 moving average on the weekly. So no panic there. Amazon, much uglier. Okay, this thing broke through, failed at the top here, rolled over, broke the 21, broke the 50. Everything is downward momentum here. You got a bearish PSR. Amazon right now, I think you got to stick away from this thing for at least a little bit. Let's see what happens. Give it some space. Okay, let it get all its a little aggression out. But you're right back to the 21 EMA here on the weekly. This is not a bad spot. But if we break it, I'm going to look at this 50, which is about 165, which is also where the 200 is. If we get anywhere near that thing, I am going long on leaps on Amazon. Okay. Meta looked nice today for a little bit of a reversal. Maybe you got a little bit of attempt at a gap fill. It still looks ugly. It's falling. I wouldn't let today fool you 100%, but we'll keep an eye on it. I don't really want to touch Meta right now. I don't think this chart sets up well. Google doesn't look too healthy. I think I'll stay away from that. And it's breaking this ascending wedge to the downside. That's it's already breaking it here, but I think that's a pretty bearish look to it. Nvidia holding the 50 2 days in a row. That's possibly a good sign here. I'd really love for this thing, okay, to get down a little bit further here. However, you don't get a chance to get in Nvidia at the 50 EMA on the daily very often. Last time you did, okay, it ran from 80 to 140, split adjusted. Okay, not quite an 80% winner there. So not a bad entry point here, but if you look at this weekly, we are way far away from any kind of moving averages. I'd really like to get long. I'd like the opportunity to get into Nvidia. We might have just had it. I don't know. All right, I know, and I'll wrap up here. Now we're going to keep this moving for you guys, and my voice is just not going to hold up much more. All right, Tesla here. Good thing I'm going on vacation next week. All right, Tesla, huge breakout. This is a pretty good little symmetrical triangle that it's building here. Yeah, a bad one. Okay, look at that thing. Okay, so this is pretty interesting here. I like what we're seeing on it. It's getting ready to pop one way or the other, but the momentum is all down on the daily. The momentum is a little bit overbought, but up on the weekly. So daily down, weekly up. I think you just got to leave it alone. All right, we got into a few things today. We got stopped out on an AVGO, so Broadcom. We got stopped out on a trade in the active trader service, symmetrical triangle. It broke to the downside. We were hoping for a upside break on it. Didn't happen. Broke to the downside. It held in there pretty good today around this 50, which everything's holding around the 50. Every time we get to this 50, we start to get some recovery. So I do like it here. I'd like to get back into AVGO. And then last thing I want to touch base on, two things. I like crowd here. So CrowdStrike gave us a good opportunity, I think, today to get into a trade. So we did. We got in today on a trade on CrowdStrike in the active trader service. We came down. We touched the 21 on the weekly. That's a good sign. Every time we touch the 21, what keeps happening? We keep bouncing higher. Okay? This is still potentially a higher low, higher high, higher low, still a good bullish trend. We could probably even draw a nice trend line hitting a good number of things here. So this is not a bad looking trend line. I think it makes actually some sense. And we came doggone close to it today, 3 ATR. Now, we're definitely in a bearish mode on all the indicators, MACD, RSI, but we're getting almost to overbought levels, which I think is another good opportunity. I might be a tad early, but I like this candle here today. So I like the candle we got in. We're up just a fraction on this thing today. I like CrowdStrike in here. I think this is a good opportunity. And then we also, MicroStrategy is my Bitcoin proxy. I like Bitcoin. I would have liked to seen Bitcoin come down a little further, but really on the weekly here, you bounced off the 21, ran higher, bounced off the 21, and gapped up this week. Okay, so we got long on MicroStrategy, which is basically a Bitcoin proxy play. Squeeze is firing to the upside. MACD and RSI not exactly giving you a whole lot of help, but 21 over the 50 here, I like it. The weekly looks pretty decent. I like it here. And MicroStrategy has really, really good volatility and really good premium to sell. So we are way down like around 700 here on this particular stock. So lots of good little things. I think we're looking at some more things tomorrow to add in. These are all starting to play out a bit. So we're going to keep watching some of these stocks. Man, you're back to the 200-day moving average on AMD. You don't get that off. You don't get that often. Okay, and when you do, you better really consider it. They're a pretty decent little support level here. Maybe we can't hold this. Maybe we do, but you're holding the 50 EMA. You don't get a chance to get in at the 50 often. And when you do, okay, it doesn't break it for long. So take a look at AMD. I mean, there's still good stuff playing out all over the place here. So I think you got to keep your eyes on what's going on in some of these markets, because I think there's some pretty good stuff happening. But I definitely think there's opportunities to play. All right, I'm sorry that I went a little longer on that. I just liked a lot of different charts. Let's just jump in here. Excuse me. All right, on the day, Delta popped up 794, still 0.15, still under our 0.2, but we're increasing Delta. So as the market's falling, our Delta is rising. If we get to about 0.2, I probably will have to take some action, which means I'm going to try to get some negative Delta plays going. But if the market, simmers down a tad, it'll take care of it on its own. So I'm not getting too crazy yet. I won't deal with anything for a while. Theta, though, popped up. We got a nice boost in the VIX, 10% raise to 1593, almost 16. Big move on VIX. Volatility is up, which means our Theta is up. 1695, juicy, like it. Okay, 0.32%. We're heading back to the 0.4. Netlick did drop today, 522, 470, but we didn't close any losers. So it's just It's just a little bit of the market moving us lower. BP usage popped up today as you would expect. However, we're still sitting, if we take Bill out of the equation, we are still sitting at only 52% buying power. Perfect. Okay. A, I can't place any trades, but B, I don't have to do anything. Just let this thing work and let the plan run itself out. So we did book $1,780 yesterday. I didn't really cover this with you because I didn't do a video yesterday. So I'll just cover them quickly. We actually closed a gold naked put for $1,000 yesterday. We also closed a call spread, a 0 DTE for a winner. We also closed a put spread, 0 DTE for a winner. And then we had a really tiny little put butterfly that we got out of early because we couldn't really watch it. Okay, so overall, pretty good day, pretty good week on everything that we're doing here in the portfolio. We are still up 28% for the year. Market's up 16.9. We are beating the living tar out of the S&P 500 with a 4.3% average monthly return. Good looking stuff everywhere. We are over our budgeted amount that we want to win for this month by over $12,000 so far. Can it change? It certainly can. Okay. And really, when we look at our strategy builder, which is how we lay everything out, okay, we've got our full allotment of long-term 112s on. We've got plenty of 112s on futures, all kinds of different futures. Okay. We've got all of our Strangle allotment on and then some. We're in our 120-day naked puts on ES. We're also in our XL 112 trades. Okay. We've got our hedges rolling. Okay. And we've actually increased our bill. Okay. So we've increased our bill up to $78,000 worth of margin. All right. Last thing I want to do here is let's just take a quick look at the portfolio. So let me share the portfolio with you. Okay. It turned out to be a longer video than I thought, especially with my voice. All right, so here we go. Let's take a look through. Let's see what things are happening. Okay, overall, things look pretty good. Aussie dollar. Okay, we got one Strangle trade on that. These are after hours numbers, so you can't really put a lot of stock in them. But this thing's up pretty nicely. It's not up 73%, by the way. We're in the euro. This thing's up nicely. 16% maybe. This is after hours, and Tasty's numbers are always FUBAR after hours. Oil, we're just sitting on a 112 trade here, 82%. Here, we're also sitting on another 112 trade here. It's down just a fraction. Okay, don't know if I trust these numbers. Okay, but I think oil's in pretty good shape. Here on this 112, we got a ratio spread here that's just down a couple $100. We're nowhere near any of these numbers, so that's fine. Remember, we talked about oil earlier, and oil was in a pretty good space, but it's been dropping on the daily. It's all good. All right, we're sitting on a Strangle in oil. This thing's up 34% in 9 days. Okay, ES, we've got put debit spread from a 112, put debit spread, hedge, put debit spread, and then a full long-term 112. With a 83% on the naked puts so far. So that's all good. And these, the put debit spread starting to wake up a little bit, which is nice to see here. Okay. Other ES, we've got long-term 112 winner so far, 51% up. Got an XL 112 that we've made some adjustments on. So these numbers really can't be taken into effect because Tasty doesn't calculate numbers correctly here, but we're still up on those naked puts by a whopping amount, and they've already been rolled once. Okay, we've got another long-term 112 here. It's up 20% in 27 days. Nothing wrong there. Another XL trade that has had the naked puts and the put debit spread adjusted. Yes, this percentage is not correct. Okay, because this naked put here, or the short puts of the PDS have already been rolled. So the P&L is wrong. But other than that, this trade is fine. If we were to close it now, okay, we could technically close this position, make some money on it, right? XL 112 here, this thing's up 7%. Got the naked puts up 41% already on this thing. This is a nice big 200 wide trap. Okay, this thing is in great shape. Love where we are on this trade. So when we opened this trap, if you look at that spread, what 46.75 and then 72.50. So it was $25 that it cost us to put the PDS on. $25 to put it on, and you can see it's at $12 now. So it's already made half of its cost back already. Great. I love the way these are setting up. Okay. And also extraordinarily low delta, 29 delta on this. Okay. Long-term 112. So you can see the delta on this. So you can see how the deltas are different on each of these. Okay. Delta on a standard long-term 112, 142 on that delta. Okay. This one's down fractionally, down a couple $100. Another long-term 112. This one's down fractionally. Nothing to really be worried about there. Got a naked put that's on. This thing's down a bit. Okay, we got another XL trade on. This thing's down just a couple $100. Okay, and then we have another XL 111 trade that we have on. This thing's down a couple $100 in 9 days. Okay, but that's because of the naked puts. If you start to look at the traps on these things, these traps, in fact, this trap is almost profitable now. Okay, so this trap is actually profitable already. This trap is slightly profitable. Okay, so we're doing well. I like where we are on these trades on ES. We are in gold. We got a strangle on gold. That thing's down a fraction. Gold's been running, so it's all good. 34% down, nothing big. And here's a 112 on, or 111 on gold. This thing's up to 73%. NASDAQ, oh, we're sitting at 100% winner. Here it expires tomorrow, so this thing will come off tomorrow for a full 100% winner. We'll book another $2,000 in gains tomorrow, and we'll free up some more BP. So we got that going for us. Bonds, 112 trades up 118%. Bonds got a strangle up 30%, got a strangle up 22%, and got a naked put that's down $170. Okay, Bill, we're doing fine on that. And then TLT, we're just sitting on a long call here. That's down a couple $100. All right, so there's where we are. Moral of the story today. So moral of the story today, you don't need to look at my face here. I mean, when you can see me, even though I can't talk right today. Moral of the story is, please don't look at your P&L every 5 flipping minutes in the day, and don't be posting on Twitter and Discord and Facebook. And, oh, I'm down on the day. I'm down. It's red. The world's ending. Just because your P&L is down, okay, doesn't mean you're in trouble. Okay, I just went through all my trades. There's nothing there that's more than like a 20% loss or something like that. Okay, we don't stop out till like a 200% loss. So I don't even have to look. I can't wait to go on vacation next week and just relax, stay away from the naysayers, stay away from the panic people, stay away from people telling me how to interpret the news, telling me all the things about the Republican convention and what Donald Jr. said or J.D. Vance said or what Trump's going to say tonight. I don't really care. Okay, I don't care what Trump says. I don't care what Biden says. I don't care what Kamala Harris says. I don't care what J.D. Vance says. I know what side I'm on, but I really don't care. Okay, what I care about is running my piece. Yeah, I'll vote in November. Okay, I'll do my duty. Okay, I'll be the American, and I'm going to vote for my party. However, what I'm not going to do is get swayed by anyone's opinions about anything right now and modify any of my trading style. I am 100% committed to my trade plan. And if you followed back in 2022, which I didn't do YouTube back then, but if you were in the Discord, I was up 82% that year in a bear market year. I am hoping that we get the same sort of bear market setup the rest of this year. I don't think it's going to happen. Okay, I'm kind of more in the Tom Lee camp than I am in the bear market camp, but I would love to see a nice, orderly, calm, slow, down moving market. Okay, that happens, we are going to make so much flipping money, okay, that it'll be insane. Okay, 82% in 2022. I'm coming for you. Okay, what are we up this year already? We're up 30% almost. Okay, I was at 28% this afternoon when the market closed. Okay, so I'm almost up 30% at the halfway part. If the market goes sideways to down, if it goes down at all, we're going to smash it this year. Okay, if you like this video, click down below. Give me your best mindset takeaways. What's something that you can do that helps you keep the positive mindset, keep yourself focused on your P&L of your realized gains and off of your P&L of your unrealized net lick? Okay, how can you keep yourself focused? Okay, write it down before you go to bed, pop it in the comments down below. But if you focus on trading your plan and don't even look at your P&L, I guarantee you're going to be a much happier trader. You're going to have a clearer mindset. It's going to take you years to do it. Okay, some people, it's going to take you decades because you're going to have to watch everybody's YouTube channels, including mine. Okay, but what I'm not telling you on my YouTube channel is, hey, we're down, the world's ending, or we're up, the world is great. Okay, I'm going to show you what I'm doing. Follow your plan. All right, that's enough for me. My voice can't take it anymore. Give me a like down below if you like this video. Give me the thumbs up. I know it's longer than I anticipated today, but I wanted to give the information to you guys, and I hope you find it valuable. Have a great rest of your evening, people. We'll see you later. Bye-bye.